Hello, chart watchers, and welcome to this final Friday, September 27th, 2019 episode of Market Watchers Live with your hosts, Tom Bowley and Erin Swenlin. On behalf of Erin, I want to thank all of you for tuning into Market Watchers Live over the past couple of years, and we certainly hope you'll join us on our other shows, which we will discuss later in this show. All right, let's take a look at what's going on in the market today. And so far, not bad. I mean, we were down quite a bit earlier. We are trying to bounce back. It's bifurcated, though. We do have the Dow Jones Industrial Average up 45, while we've got the S&P 500 down 2, the NASDAQ down 25, although it was down about 40 additional points earlier. We were down about 65 just a little bit ago. We are rallying back. Russell 2000 flat today. 10-year Treasury yield up 1 basis point, 1.70%. Volatility index cooling off a little bit. We did have earlier in the week a move over 18. We are back down at this point, just to 16, roughly 16 and a half. Financials leading the market to the upside today, along with healthcare. These are the two best groups. Technology and communication services, both pretty weak today, although you can see the XLK is quite a bit off its earlier low. The XLC, not so much. Internet, I know, having a rough day today. Banks leading to the upside. We've been seeing that 10-year Treasury yield, coming off those recent lows. Banks really haven't pulled back too much, and today went up, tried to make a breakout. This is something to watch, not just this afternoon, but also into next week and into the fourth quarter. A breaking out of the bank group would be bullish for the overall market. Renewable energy really taking a hit now. This is the third or fourth day this week where we've seen big red candles, kind of negating that breakout of the symmetrical triangle that I had talked about, the declining highs, the rising lows. We broke out. Now we're coming right back down. This is going to be a key area, trying to hold this 120 level. Truckers, not very strong today either, backing off. This is the weakest industry group within the industrials, but I do like the group going forward, but right now, not so much, not today. The UUP, wanted to mention this because the dollar's showing additional signs of strength, and the last couple of days, the UUP broke out above that early September high, and you can see the GLD, as a result, moving back down toward the lowest levels that it's seen in about 6 or 7 weeks. So rising dollar, generally not good for gold. It certainly is not today. All right, Erin, I tell you what, it's been a couple of years that we've been doing this. Really kind of got some mixed emotions because I know we got some great stuff coming up, but wow, it's been a long time doing this.
I know, it was really... we've got so much exciting stuff to go, but I have to say, I feel like I'm a little bit in an alternate universe right now because I'm back on the show, for one. And number two, it's actually raining here in California. So
wow.
It's great to be back for the finale, though, and to talk to you. It's been too long. And talking to the audience as well on this show. How exciting. I'm excited, though, about the new stuff coming up.
Yeah, I'd like to say that, it's snowing here in South Carolina to match your rain in Southern California, but that is not the case. It's still 90 degrees here. I don't think Mother Nature's gotten the memo that we're heading into fall here. It's been in the 90s quite a bit the last few weeks, and looks like probably for the next 10 days or a week at least. Going to continue. Yeah. Been a hot late summer, early fall for sure.
Well, it's our last show. Should we talk hockey like we used to? I think we'll pass, huh?
It's too early. I mean, I could get into some football, but I don't think anybody wants to hear about that. So
I am the undefeated team right now in my fantasy league. So for football, so I'm feeling pretty good about that.
Well, we could spend an hour on that then, I guess. No, we're going to get rolling. We got a lot going on today. Do really want to thank everybody for all the support that you've given us over the past couple of years. Also want to give a big shout out to all the folks in the office that work with us. You all don't hear their voice out there, but we certainly hear their voice, and they've helped us so much with the show over the past 2 years. So Gretchen and Zach and Rachel and everybody back in the office, really just a big shout out and thank you for everything that you've done for us and that you will continue to do in the future with all of our new shows.
Absolutely.
All right, well, it's time to get into this. We're going to start off, as you can see, I'm going to let you, Erin, take it away. This is our final show. This is your spiel here with the agenda, but what do we got?
That's right, agenda. Here we go. Well, our first segment, we're going to do something called spin off. Maybe you guys have figured it out already, but maybe not. We're going to revisit one of our old segments, agree or disagree. Go ahead and take that poll because we will be talking about those asset classes. So you want to take that poll. And then 10 and 10, our very first symbol will be Exxon Mobil, XOM. Go ahead and start putting stuff in the chat room. I'm looking forward to hanging out with you guys in there.
Okay.
I know.
And I'm going to go ahead. And
yes, let's go ahead to technical news and headlines. Yes, I'm a little rusty, admittedly.
Yeah, we're going to go into technical news and headlines. We got a little bit going on here today, so probably ought to talk about it. We got durable goods coming in better than expected. We strip out the transport, still better than expected. August personal income matched expectations. Personal spending did come in a little lighter than expected. And then finally, August consumer sentiment better than expected. So overall, pretty decent reports. When we take a look at what's going on in the Treasury market, I mentioned earlier, we are up slightly. That continues. You can see on this chart, this is just over the past 6 months or so. We've clearly been in a downtrend. I mentioned yesterday, and I'll show it again in just a minute because I do think it's really important. But I think if we get back up and take out this high, if we can put in, get a nice rally, pull back, put in a higher low, and then break out again, I think that would really start to suggest that there will be more rotation away from treasuries and into equities. And so that's what I would be looking for, is maybe a sign, a confirming sign that equities might be a really good place to be in the fourth quarter. I do want to just show you that weekly chart, though, if you weren't in yesterday. When we broke above, I'm going to go back even further here. Let's go back 5 years. Because when we broke above, we were struggling back in 2015, 2016. Remember when the stock market was consolidating and moving, sideways to down? Well, back in 2015, 2016, we had the same kind of an environment where we couldn't get through the 20-week moving average. Well, we finally did it toward the end of 2016. And when we did that, not only did the 10-year Treasury yield go up, but if you recall, it was a huge bullish period for U.S. equities. We actually went up from latter part of 2016 to early 2018 without a single 3% pullback. Think about that. I mean, all the volatility we've been through over the last 20 months or so, it's kind of hard to remember, but that 14-month period or 15-month period, we didn't have a single 3% pullback on the S&P 500. The reason I bring that up is if we do break this downtrend, get back up through that 20-week moving average, I don't know if we'll see that kind of movement in the S&P 500, but I do think that rotation will cause a lot of movement to the upside in the S&P. So something to keep in mind. All right, earnings reports. We did have a couple out last night, so I wanted to mention those. First one there, Micron Technology. That's the one I want to go over here because this is the big one. Micron, they did post pretty good results for the prior quarter, but the problem is looking ahead, they warned, and the market didn't like it. They lowered their forecast, and takes just one look at the chart, and you can see, look at the volume coming into Micron today. Already 46 million shares. We're not even the halfway point of the day. So if we keep this pace up, we could be looking at 100 million shares. And when you go back over the last year, that's only happened 2 other times when we've seen volume like this. And so breaking down out of this uptrend, losing the moving averages on this kind of volume, unless we get a big reversal later in the day, I don't know. This doesn't look very good to me. So I would be a little concerned about the way Micron is reacting, the way the stock price is reacting to what wasn't, particularly good news. One other chart that I wanted to show you, and that was the truckers, because I do think this is an area of the market that's going to have a strong fourth quarter. We did break out recently above these highs. We've pulled back to the 20-day, nice bullish engulfing candle. We're pulling back today, but so far holding that rising 20. I think the truckers are going to move from here. So that's a chart that I would certainly be paying attention to. All right, if we go into the dashboard and looking at these technical ranks, let's see if the stock that I had here is on the list still. There it is, SOLY. I'm going to go ahead and bring up SOLY, and I'm going to bring it up in my scooter mover because I do have it annotated. And I wanted to just bring up again, the movement in price currently is just one part of why a scooter moves up or down. Because if you look, the rate of change on a 125 period basis, this is 30% of the calculation of the scooter. The 20-day rate of change is 15%. So these two indicators right here are 45% of the calculation. Now, when you're looking at rate of change, you're looking at where you are now versus where the price was 125 days ago and 20 days ago. So as we're moving down, that obviously is a negative. But while we were moving up here earlier in September, look at the scooter. Scooter was, or the rate of change. Rate of change was dropping, even though price was going up. Why? Because this movement up was even faster. So yes, this is going up, but it's losing ground to the price action 125 days ago. And that's why you see this moving down. I just wanted to bring it up because, again, I think this is just another illustration of looking beyond just the scooter rank and the scooter score, and really getting a feel for what drives the scooter in one direction or the other. As far as the technical side here, let's see if gap support holds. We were down quite a bit earlier. Maybe if we get back up close to the high of the day later today, that would be a really good sign for the stock. But short term, we are in that downtrend. We'll see if that changes. So that is the reason for this stock being your final scooter mover of the day.
All right, let's go ahead and move right into some upgrades and downgrades. I am going to start with our upgrades. Let's look at Church & Dwight. Church & Dwight was upgraded today. And as you can see, we've got a pretty nice looking chart. You got the breakout now that actually happened yesterday from what I would say is an ascending triangle. That's a bullish formation. So we got that breakout. If you look in that thumbnail here on the right, you can see the 5-day EMA is getting ready to cross right up above that 20. That'll give us a short-term trend model buy signal. But really, I like this PMO. I think that it's been making its move for quite some time during this area while it was forming this ascending triangle. So I do like it. It's in that consumer staples area, which I do think might be the place to be coming up here because I'm feeling a little more bearish. So what a surprise, right? I'm always the bear. Okay, let's go ahead and look at our next upgrade. And this is Kimberly-Clark. And full disclosure, I do still own this one. And part of the reason is it's been holding on to this rising trend. And I'm an intermediate term investor. So even though I took this hit back here, I had gotten in back here. So I was willing to take that hit. And sure enough, now we're making that move back up. Of course, it's getting close to overhead resistance here at about 142.50. So it'll be interesting to see if it can pop out above that. I am expecting it to. We've got a PMO buy signal. Look at the OBV volume. We're getting nice positive volume coming in here with rising bottoms on that OBV. And of course, we've got a scooter that's now in the positive territory there. And then just one more I'm going to quickly look at, and that is Canopy Growth. This one was downgraded today. The weed stocks haven't been doing too well. Canopy Growth is a really good example of that. And right now you can see we have hit some really important support here, right? And the PMO is starting to straighten out a little. Looks like it might want to make that move and do a breakout. But, you know, I was really curious about the weekly chart, so I pulled that one up real quick. And you can see that really important support here has been broken with these two lows. So I don't think that this is a stopping point when you look at the weekly chart. I think we could see CGC move all the way down to 1750. And that's all I have for upgrades and downgrades. We will be right back with Spinoff. All right, we are back with spinoff, and spinoff is really, I think you and I are pretty proud of this, Tom, but we've had a lot of spinoffs from Market Watchers Live, and really most of the shows that are on our new fall lineup kind of come from the Market Watchers Live. The way we did the show, the kinds of information that we know people want to find out in the mornings. And so I think the new fall lineup that you guys have been talking about while I've been gone is pretty exciting. And you can get to this page. This is just the StockCharts TV. You can go in and find the show lineups right here. Just click on that and you will get to this page. And as you can see, we've got all of the new shows listed here. You can come over here and just hover over the show you might be interested in. It'll tell you when it's going to be on. And it also will give you kind of an idea of what is, being talked about on those shows. And I mean, there's so many new ones here. Trading Places, of course, I'll let you talk all about that one, Tom, when you get there. But I wanted to talk about, we haven't really stressed too much our shows that have been already have been running already. So I did want to talk about the shows that I'm on so that, you don't get to hear me on Market Watchers. And I hope that you will travel and listen on the two shows that I am still on. And one of those is WealthWise Women. I'm on that show with Ellen and McGonagle. We've really tailored that show to your beginning investors, but you can also come in as an expert or veteran chartist like we are, as you can see, and you can come in and listen. And I think it's really a great way to introduce people to the markets and to investments. It's been really great. We went to the Money Show, Mary Ellen and I, in August, and we got such a great response to the WealthWise Women concept and trying to draw more women into the investment field, but really not just women. It's time to get everybody involved. And, millennials are starting to get involved with all of those apps that are out there, but they needed to kind of know what they're doing. And I think that this show is a way to really help them. I think that mentoring is super important, and that Mary Ellen and I are both going to mentor the audience, but also for those of you out there, and I know there are a ton of you that listen to Market Watchers, they, you guys are some experts out there too, so don't sell yourself short. And it's up to us to mentor and bring people over that bridge. And so I challenge you to do that. And this is a really great show for you to bring them in on to just check out and see that things aren't too complicated. We make it very comfortable. It's kind of chatty because, we're really good friends outside of the WealthWise Women show. And then, of course, DecisionPoint. I am on that with my father, and we did move to Mondays at 5 p.m. Eastern time. And it is always great to sit down with my father and talk about the market. And he gives us some really great bonus charts, is what we call them, his grab bag. So you don't see the same thing every show. We have kind of an interesting look at the markets. He's got some really great yield array charts that we've been looking at that are awesome. And then we did just come up with DecisionPoint. Carl did. I'm going to give him the credit, obviously, where credit is due. He came up with two new indicators called the Silver Cross Index and the Golden Cross Index. And really what it is it just keeps track of the percentage of stocks within the index that we're looking at. And right now we just have the S&P, but we'll have the mid cap, small cap soon. But we look at the percentage of those in that index that are on intermediate term trend model buy signals and long-term trend model buy signals. So the Silver Cross is all of those that have 20 above their 50. So you get that percentage. And then the Golden Cross, you get the percentage of stocks within that index that are on by long-term trend model buy signals, meaning the 50-day EMA is above the 200-day EMA. And by really, tracking those, and in fact, I'm just going to sneak in here and show you that chart. And it's in my live chart list. It's the very first one. And there you go. Oh, of course, right now it doesn't have data in it. We're changing up some of the names on these. So it's going to look a little different, but that's why I'm not seeing those lines there, of course, when I want to show everybody. And then, of course, there is the StockCharts YouTube channel, guys. You can go there and see all of the new shows. We have set up different playlists. And of course, I have a playlist for, let's see if we go over here to playlists. And here you go. You can see the various, here's WealthWise Women. So if you click on that, it'll give you our full playlist. And of course, if you go down here, there is our full playlist for DecisionPoint.com. So you can get to all of our different shows right there. So I'm pretty excited about the new fall lineup, but I'm also obviously very excited about what we already have in the hopper there that we already have been doing. So I wanted to highlight a few of those, mainly my 2 shows, so you knew where you could find me. So I'm going to pass it to you, Tom, to talk a little bit more about the new fall lineup. I think you're a lot more familiar with that than I am.
Yeah, well, I'm really excited because as you look through the fall lineup and a lot of the new shows, everyone has been really on MarketWatchers Live at one point or another, either as a guest or as a host or co-host.
Mm-hmm.
And so everybody's kind of already gotten a sense of what each of us looks at in terms of the market and the way we approach the market and our trading styles and so forth, whether we're short-term, long-term. And now, rather than just have a short, 10, 15-minute interview segment or a once a month 30-minute segment, now a lot of these great technicians are going to have their own show that you can tune into regularly. So you don't have to wait 30 days or 45 days for someone to come on and make an appearance. So I'm really excited about it. And I do think that a lot of what we've done here at MarketWatchers Live the past couple of years has kind of pioneered some of these shows and some of the things that will be discussed. And so I'm really proud of the work that we've done these past couple of years leading to this next step, which I think is pretty cool, having so many different shows and showing so much information, having so many different experts sharing their knowledge. Because really, when I think about stock charts, that's kind of what I think about. I think about obviously great tools, but I also think tremendous education. I mean, Chart School, all of these, the shows that we've had on StockCharts TV and so forth. So I think all of those that you're showing there right now on the screen are really just excellent shows. And I think you make a really good point too. We've been focusing a lot on the new fall lineup with a lot of the new shows, but there are some tremendous shows already on StockCharts TV. So everyone should definitely check these out. And you know what? Everybody is different in terms of their style and what they like. Some people may be more longer term and may not really jive with the short term that I take, the approach that I take. So there's certainly a lot to choose from. And I think this lineup is going to be great. Now, as far as my own show, let me just show you a couple of things here and just kind of focus on a few things that I'm going to try to focus on during my show. If you've been a follower of mine, and I'm going to go back to my blog, Trading Places with Tom Bowley. If you've been a fan of the blog or if you've read the blog on a regular basis, up until recently, probably about a week or so ago, I did a very structured blog article every day. And it was released, published, normally right around 9 o'clock. I really tried to have that issued at 9 o'clock. And so it's not really a coincidence that this show is going to be starting at 9 o'clock, because that to me is it's time to get focused on the day's trading news, the activity, what's going on in pre-market, what happened overnight in Asia, what's going on in Europe, because a lot of this really translates into how the U.S. market performs. So if you've gone through my blog in the past, you know that I have a recap from the prior day, just touching on a couple of things that I thought was important. I get into pre-market action, just going over a couple of things maybe to be aware of. I have a current outlook. I have a sector industry watch. So I try to really focus in. And you can see actually in this one, this was the symmetrical triangle that I was talking about earlier that the renewable energy space broke out from, went up and tested the high. And now it's come roaring all the way back down into this support zone. But I'm trying to feature different areas of the market that I think are going to be important. not just for short-term traders, but also those who are looking more of just big picture, and even those who are buy and hold, I think can get a lot out of the information that I share. I'd go into historical tendencies, and of course, I focus a lot on earnings. And as you know, earnings and economic reports is where we start Market Watchers Live every single day, because we want to know what's going on. While I don't buy and sell based on fundamentals, I mean, overall fundamentals is what's going to drive the stock market over time. We know that there's a lot of short-term inefficiencies in the market, and that's why we get the volatility and we get the moves up, the moves down. I mean, it's all that emotion that drives the swings and that volatility. But at the end of the day, it's about earnings reports. It's about economic reports. It's about what the Fed's doing, their policy statements. And so all of that, everything I just showed you here in this blog is going to be in Trading Places Live when I start the show on Tuesday. So it really, I just kind of say that it's bringing my blog to life. Instead of writing it and posting charts in my blog, I really feel like a lot of this you're going to see when you simply come into the show. A lot of these, and when you're talking, I can talk a whole lot faster than I can type. I can type pretty fast, but I can talk a lot faster. So there's going to be a tremendous amount of information that I'm able to share in a 30-minute period. I do want to just say that there's going to be a tremendous emphasis on relative strength and earnings reports, not just the reports, but also the guidance, looking at stocks, how they're performing versus their peers after they get these reports. I think that is incredibly important in how a stock or an industry group performs going forward. Take the latest financial fundamental information and see how Wall Street reacts to it. I think that's so important in the market. So for instance, now this is looking out a ways, we still got a couple weeks, but on October 15th, these are the companies that are slated to report in market cap order. And you can see right here at the top, JP Morgan. Well, we spend a lot of time talking about banks, and they're trying to make a breakout right now. Well, if they make that breakout, I want to know what's going on with JP Morgan. So for instance, I'm going to be talking about the report. When the earnings come out, I'm going to say, okay, JP Morgan did this, they beat this, they missed this, they raised guidance, missed guidance, lowered guidance, whatever. And then I'm going to pull the chart up, and I'm going to take a look at it mostly on these relative charts that I like to use. So you can see, even though banks haven't broken out, JP Morgan has broken out above the prior tops. So I don't even have to look at the relative strength lines. I know that this is one of the better bank stocks because it's breaking out. The banking index is not breaking out. So when you come down to JP Morgan, you can see this stock has been outperforming the banks for the last 6-7 months. And if the company comes out with great earnings, you get a nice earnings report, then it's a stock that I'm going to want to follow in terms of potentially trading it down the road. I like to trade strength. I like to trade relative winners. And so the show is really going to focus on a lot of that in addition to the economic reports and so forth. And also at the same time, trying to make the show very educational. Educational in terms of using stock charts, educational in terms of providing hopefully really good technical analysis, explaining patterns, all of that I think will add to the show and be really exciting. The other thing is with my show, it's only going to be 2 days a week, Tuesdays and Thursdays. And so I've been talking here, Erin, you and I were doing this show for quite a while for an hour and a half a day.
I know.
And that's a lot of time, 5 days a week. I mean, it's 7.5 hours. So you can go through and cover, quite a bit in 7.5 hours throughout the week. Now, all of a sudden I'm doing half hour for 2 days, which is, 1 hour a week instead of 7.5. So it's going to be exciting. There's going to be a lot of charts. I'm really looking forward to it. I love doing these shows, and I've always wanted to do a morning show. So I think this is going to be great. I'm really looking forward to it.
Yeah, you would have never got me up that early to do a morning show.
I tried.
I know.
I tried. When we started the show, I went back to Chip. I was like, Chip, can we do a morning show? And he said,
Right.
well, it's 6 o'clock on the West Coast when because I was wanting to do a 9 to 10 show or even an 8 to 9 show.
Right.
And then of course he reminded me that you would be getting up at like 4 o'clock in the morning to try to get ready for that. And I was like, okay.
Right. Well, and I'd feel more sorry for the production staff, honestly.
Yeah. So
Super
anyway,
early, 5 days a week.
yeah, that's how that all evolved. But it has been a good 2 years, really been a lot of fun. And I know one of our segments, we're going to move into agree or disagree. And, this is a segment that I believe we did right from the very beginning. I mean, I kind of remember doing this a long, long time ago. So I figure it's a good fitting way to look at a lot of different areas of the market. We didn't always agree on things. Sometimes we agree, but we have different strategies and different philosophies and different.
Well, the time. I'm more intermediate term, so it does kind of shade what I'm doing in comparison to you. So
yeah, and a big difference too is I follow price support so closely, and while you follow it as well, a lot of times you wait for that momentum shift.
Momentum trader, yes.
Yep. So I sometimes will get in and hoping that maybe hoping is not the right word.
Yeah, we know.
Looking for a reversal at a certain level, especially in an uptrending stock. So I'll try and get in before that you even see that turn. Sometimes it works, sometimes it doesn't. Whereas you're more waiting and seeing that turn. Mm-hmm. So it definitely leads to different ways to look at the market. So I think we'll go ahead and go into agree or disagree. And by the way, what we're going to be talking about is included in today's poll. So we'd love for you all to go in and take a look. It's going to be basically 6 different investment classes, if you will. And what we're looking for is fourth quarter performance. So we're really looking over the next 90 days. And so we're going to take these one at a time and try to go through these fairly quickly, maybe just a minute each. That probably would work out pretty well. Okay. Do you want to start it, Erin, or do you want me to start?
Okay. I'm going to start with oil. Actually, I'm sorry. I'm going to start with the dollar, UUP in particular. And my statement is that we are going to actually see going into the end of the year, we will see a breakdown of this rising wedge. And we'll probably go down and test areas down at like 2640. Looks like a good area of support at the end of the year. But I'm looking for the dollar to actually make a turn down going into the end of the year. So do you agree or disagree?
You're looking for a move down. Okay. I haven't annotated this chart in a while, but I'll bring it up. Most of you have probably seen it before. Here's the thing. The dollar has been going up. It's still in an uptrend, but you can see that the 10-year Treasury yield here in the U.S. has actually, when you take it and subtract the German 10-year Treasury yield, it's actually been declining now for almost a year. And usually what we see is a positive correlation between these two, between which way the U.S. yields versus Germany are moving, and then also the direction of the dollar. So in other words, if U.S. Treasury yields are falling faster than Germany's, which they have been, normally we see a falling dollar, and that hasn't been the case. And you can see that down here in the negative correlation. So I actually agree with you on this one. I think that the dollar has been strong. I think the uptrend remains in play, but I do think that there's going to be a pullback, and it could be a significant one over the next 3 months. I think we go lower, so I'm going to agree with you on that one.
Oh, wow. Okay.
See,
I'll take that.
Yeah, I told you we agree sometimes.
We do.
All right. I'm going to go forward then, and I'm going to talk about gold because obviously if we're talking about the dollar, that has a pretty big impact normally on gold. So let me pull up the chart on gold. I'm going to make a statement here. I'm going to pull up gold versus the S&P 500. And I am going to, let's switch this over to a line chart, and I'm going to do weekly, and I'm going to go back a ways, 10 years throughout this bull run. Okay, so gold versus the S&P 500. Now, it has been in a downtrend since 2011. The chart I just showed you on the dollar has been in an uptrend since 2011. So as the dollar outperforms, usually gold underperforms versus the S&P 500. So I think with that short-term move down in the dollar, which I agree with you, I think that gold, this is a tough one because I think the S&P is going to do well in the fourth quarter, but we are still in an uptrend. So I'm going to say gold stays in this uptrend maybe a little while longer. I don't like it longer term, but I think maybe in the fourth quarter, gold outperforms the S&P. What do you think?
All right. As far as performance, I was looking at just my gold chart, but I'm expecting gold to also not do well into the end of the year. And I know that seems counterintuitive because gold is denominated in the dollar. So they do tend, and you can look down here at the correlation, they do tend to have a almost perfect negative correlation, meaning if you get the dollar moves up, then you should expect gold to go down and vice versa. But look at what's been happening over the summer. The correlation has really gotten wonky to the point where we even see some positive correlation here between the dollar and gold. And this tells me that they don't have to travel opposite directions. Because the correlation is so wonky right now. So to me, I think that they both can move down lower. And of course, I'm kind of looking for the S&P to do that as well, but I don't want to give away my answer for the other one we're going to do. But, my sense is that gold could still outperform the S&P even if it moves lower. I think it's going to move lower, and it's really just dependent on how low the S&P is going to fall, because to me, that's also going to happen. So I'm going to have to say that I am going to disagree, because I think that gold will actually underperform going into the end of the year to the S&P 500.
All right, now who saw that one coming? Me saying gold is going to be better, and you saying gold is going to underperform.
Exactly, because typically, I'm a gold bug. Most of the time. It certainly had a great move here. I mean, I remember talking with Greg on the show, and I'm sure you remember as well. It was one of those things where, like, okay, this is like the best setup gold has had in like forever. If it does not perform like it's supposed to, if it does not take off from here, I'll be really surprised, sort of thing. And it took a little while, because I think we were saying that back here, but it did end up taking off.
Absolutely. All right.
Next up, I'm going to look at oil. I figured I might as well go through most of the big four today. And, oil, you're looking at XLE. This is oil, USO. But XLE, a lot of, I know Mr. Wyckoff, Bruce Fraser, has been talking about the energy sector and how he really is expecting it to outperform into the end of the year. And, you would expect, okay, well, if energy is going to do well, then maybe oil will do well also. I have a mixed opinion right now about USO. So I'm going to say that when I look at oil, I don't think that it is going to outperform XLE. I would be looking for it to definitely underperform, because I am looking for a breakdown here. I am looking for $10.50 on USO. You can look at WTIC, West Texas crude, and it's also heading down for that support area. So to me, I think that oil is going to underperform the XLE.
All right. I am going to say, wow, which one is it? Is it going to under? I like oil. I'm waiting for a breakout on oil. We had a big spike a week or two ago, and then we've come back, filled that gap. But I think the overall economy, I think with all the global central bankers being very dovish, I still think that the economy is going to pick up. I don't know if it's going to be in the fourth quarter, but I do think going forward in 2019, whether or not oil outperforms or underperforms, that is a really tough call, because they do, crude oil and the XLE tend to go hand in hand. Got to make a decision here. I think crude oil will outperform the XLE. I think crude oil is going to make another run at $65 a barrel. Looking at this chart, the weekly chart, we did put in a pretty big bottom back in early 2016. And when the economy is strong and the market's going higher, crude oil prices normally reflect that increasing global demand. I don't know if the XLE, if the energy companies will keep up, but I do think crude oil goes higher. So I don't know which way you phrased it, but I say crude oil outperforms.
Okay. Yeah, I said underperforms. I think it will underperform. So.
All right. All right, we're going to go into number 4. And number 4 is I'm going to focus on outside the U.S., looking at stocks outside the U.S. So there is an international ETF, and it's the VEU. This is the Vanguard All World Excluding U.S. ETF. And I know foreign, there's been a lot of talk about, foreign countries doing worse, or foreign stock markets doing worse than the U.S., and they have. You can see here, this index is way off the earlier high back in 2018. And yet when you look at the S&P 500, you can see we've been going higher. So I think it's pretty clear that when we strip out the U.S., the rest of the world has been lagging. I'm not going to say that the rest of the world outperforms the S&P 500, but I believe in the fourth quarter, we're going to get a breakout on the VEU above this double top at about 51. So that is going to be my statement on the VEU, that I believe we break out and we have a positive fourth quarter. What do you think?
All right, let me get my chart up here. I have a mixed opinion, but I'm going to say I agree. And that is because I know people will probably look at this and they're like, but Erin, your PMO is topped and it's moving down. Yes, because it's been pulling back after this particular run that it had to the upside. And now what I'm seeing is a flag formation. And so you are going to see the PMO likely flatten out when you form a flag, because you're going to see price kind of, meander downward to form the flag on top of the flagpole, that big rally. So the idea behind a flag, of course, is you've got this huge, tall rally, really, a lot of excitement, and then you need a breather. And so you get this move, kind of a consolidation move down a little bit. And so I'm looking honestly for a breakout from this possible flag formation. And that would take us above the top, that we saw back here last summer. And let me see if I can find a weekly chart real quick here. There we go. And that breakout is going to be pretty important. What I like is we had this double top and it never really executed. And it really just turned itself right back around. Now, of course, you could form a triple top, but I don't know. And you do have that weekly buy signal coming in, you see right here on the PMO. So I'm going to agree. I think that we're going to see good things from VEU.
All right, we got 2 more in 2 minutes. What do you think?
All right, 2 more in 2 minutes. All right, so I have, next up, I'm going to look at bonds, because like I said, I wanted to talk about our big 4. So I'm going to look at TLT. And, TLT is experiencing, after this huge rally, really, that went all through 2019, it's kind of consolidating it and getting a little crazy here. But I'm going to say that we will see a breakout on TLT above those highs from August. And my reasoning is that, we still are seeing a lot of internal strength when you look at the scooter. The OBV, we saw that decline, the declining tops, but that's what we saw back here as well. Right now, it looks to me like we are forming another little flag here. And that would tell me to expect a breakout to the upsides. And of course, the PMO, while it's flat, makes sense. We had a pretty steady move to the upside, and that's going to flatten out your PMO when you have equal acceleration. So I'm looking at a flag here possibly, and I'm looking for higher prices on TLT.
All right, I will disagree with you on this one.
Okay.
I think that there's a longer term issue. I mean, if Treasury prices keep going up, obviously yields keep going down. I don't know. Maybe we'll go negative with our yields like other countries, most other countries around the world, but I just don't see it happening. So I think that right now the TLT on this 10-year weekly chart looks very similar, with this PPO up over 4. You can see, prior tops have been in about this area after we've had these huge moves. It doesn't mean that we won't go to a new high. I think, it's possible, especially if the trade war lingers on, or maybe the economic growth isn't what we think it could be, and that starts to slow down, then maybe the TLT goes higher. But I think over a period of time, and we're talking about the next 90 days, I don't think it's going to go back up over that top. I really don't. I think that we're going to begin to start this move to the downside. I think yields will start to move a little bit higher, and I think that will encourage more money rotating into the S&P 500. So I am going to disagree and say that the TLT does not break out. And then our final one, since I just mentioned the S&P 500, I'm going to give you one that you can shoot down pretty quickly here. I'm looking at the S&P 500, and I am really bullish on the market. And the Fed just came out with an announcement last week, and literally after the first hour, which was a knee-jerk reaction lower, we went through the final hour on Wednesday of last week, and then the beginning on Thursday with this big run to the upside. And I saw money rotating in very aggressive fashion just in those few hours. And I think that was the start of some accumulation that's going to carry the market higher. I believe the S&P 500, I'm going to go way out on a limb here. S&P 500 hits 3,200 at some point during the fourth quarter.
Whoa. Well, yeah, that's an easy one for me. I definitely disagree on that one. Wow. Okay. Yeah, because I don't even think, I think there's a good chance we'll hit new all-time highs. But overall, I'm not expecting like great things right now out of the market. I've got this sell signal going on the PMO that's coming in today, declining tops on price and rising tops on the OBV. So despite all this lovely positive volume that has been coming in, we weren't able to make a new all-time high. And that's a problem. But the main problem I have is when I look at the NASDAQ chart. And this is, of course, mostly technology. So, this is not looking so good. We lost that support area that we're still holding on the S&P. I got a PMO sell signal like last week or earlier this week. And, that's obviously not a good sign. The momentum is dying on technology. And again, there's your declining tops here on the OBV and rising tops here. So it just, when I see technology getting ready to suffer like this, and, I know we need to move on. So, but if you go and look at a weekly chart for the FANG stocks, there's some pretty scary double tops lining up there for these big technology companies. And so I'm not feeling good about the market. Going into the fourth quarter, yeah, I think we're going to get probably see some new all-time highs on the S&P, but I don't think it'll, I think we'll get above it and then it'll be right back down. So I'm not looking for great things out of the market going into the end of the year.
All right. Well, final thing that we have to do is kind of do what everyone else is doing with the poll. Use those 6 items. Which one do you think is the best performer in the fourth quarter coming up?
Based on what we were talking about and saying, I suppose I should say bonds, just because that was the one that I felt pretty good about. But VEU looked pretty good. I'm right in between the two. I have to admit that before I looked at a lot of these charts, I picked the SPY. But I think looking at those charts a little more closely, I'm going to say that bonds and VEU would be my top 2.
Okay. Well, I like the S&P 500 to go higher. I also think that gold goes higher because I think we're going to go higher with maybe a slightly weaker dollar. We'll see. Gold, I don't feel quite as strong. I mean, that one's kind of going out on a limb for me. But I actually think oil. I'm going oil. I think oil is going to be the outperformer in the fourth quarter. Don't know if energy leads it. I don't know if the XLE will be the leading sector, but I do think that oil has been beaten up for a long time. I think that we're going to start seeing economic improvement around the globe, and I think that will lead to higher crude oil prices. So I believe it's going to be oil in the fourth quarter.
Oh, interesting. Sounds
all right.
good.
Well, we do have the 10 in 10, and we're running out of time, so I'm going to try to get through this thing pretty quickly. The first stock is going to be XOM. So I am ready on that one. And we just talked about a lot of energy, and I tell you, this is going to be one of the stocks that you're going to want to watch, because if ExxonMobil doesn't go higher, chances are then I just made a pretty bad statement with crude oil prices going higher. I do like today's candle. It is potentially putting in a bullish engulfing candle, and this is where we reversed earlier in September. So if you're buying into the whole energy oil thing, you really want to see a reversal here on XOM and a pushback to the upside. Notice I circled 3 tops, and this is just for education. I mean, when I get an uptrend, a very solid uptrend, and then I get a bearish engulfing candle on pretty heavy volume, all of these candles are close to 20 million, including the black candle right there. Off of an uptrend, when I get a reversing candle like that, you've got to be thinking that things are going to go south. You can see overall the energy A lot of the industry groups within energy not performing well. ExxonMobil has not been a very good stock, although it is trying to put in its relative low back in August. So if it could break back out above that mid-September relative high versus the S&P and here versus its peers, that would be a bullish development at least. So I'm okay with ExxonMobil, but I'd probably have a tight leash just because it has been an underperforming group.
All right. The most popular, and I think you kind of mentioned it when we were looking at spinoff, but JP Morgan, there's a huge amount of people who want to see that.
Yeah, I love JP Morgan. This is one of my favorite banks. So if I was going to get a bank, this is certainly one to keep an eye on. I mean, here was your breakout. Came on some pretty good volume. We're pulling back. I see a flagpole and a flag here. I think it goes higher. Banks right now are trying to make this breakout. If we could just get through this 465, 466 area, you've got a leader in JP Morgan. I'm fine with it.
All right, let's see. Next one up is going to be Goldman Sachs, another financial.
Yeah, I was actually looking at Goldman Sachs earlier today, and I like the chart. So this is another one. Financials are starting to show, some strength. What I see here when I look at Goldman Sachs, and if you go down here to the relative strength, you can see that just recently, and 6-8 weeks ago, it put in a new relative high versus the investment services. I mean, we had moved to about an 8 or 9 month high. We've been consolidating that, so we'd like to see another breakout there. But what I see here is a cup off of an uptrend. And so off of that uptrend, I see a nice cup forming, and I think we have a handle back to the moving averages. A breakout above this 222 area would measure up about another 28 points or so, maybe to about 250. So I think Goldman Sachs looks good. Breakout would confirm it.
All right. How about INVH? It's in that real estate area, which I think is still looking pretty good.
Yeah, definitely a nice breakout here on Invitation Homes. Look at the volume coming in. I really like to see these kinds of breakouts with volume because that's just telling me that there's accumulation taking place. Big move back here comes on volume. Big move here comes on volume. It's just constantly showing that the stock's being supported here by big money. And so that would continue to keep me in the stock. Now, as far as what I would be watching, I think as long as it holds this low right here, because there was the almost a triple top breakout back in August. We came back down, set this low, so we got higher highs and higher lows. Let's hold on to about 2750 to 2775, and I think we'll be okay there.
All right. Micron's taking a huge hit today. I mean, I still like it kind of intermediate term if I were in it, but wow, big hit today.
Yeah, there's a lot of really good semiconductor stocks out there, and Micron was one of them until they reported last night. I don't think Wall Street saw this one coming. You can see Micron was trading at a new 52-week high relative to semiconductors just about a week and a half ago. And, it was still holding its 20-day. It was in an uptrend. I mean, I really don't think Wall Street was expecting them to cut guidance going forward. I think that there are other plays out there. And to be honest, if I'm looking at this, I think that this got a little bit more downside before it finds support. I think it's going to head back down to about 41. I would look for something else in the semis right now.
All right. An area I still really like is consumer staples. How about Kellogg K? I think this is a pretty nice move too.
All right. Kellogg has been, this is a great earnings report. I think that we've got a nice uptrend here, holding that rising 20-day moving average. We just need that breakout above 65, which is where the sellers came in the day of earnings. We got up to 65 here, and then we sold back off. Came back to the top of gap support, and now we've just worked our way all the way back. So let me get rid of that. Let's look at this auto support resistance line right there, 65. Let's get through 65, but I agree. I think overall, this is a stock that looks pretty good in the food products area. Good volume trends. I think it's going to get the breakout.
All right. This one's been on a run, but I think it'll run further. Annaly Capital, NLY.
All right, NLY, oh boy, I don't know. I don't like this one personally. It's been in a downtrend relative to the S&P. Its group has been in a downtrend versus the S&P, and now it's gotten to an area where it failed off of some increasing volume back here in August. We had a rally, couldn't get through 880, just printed a bearish engulfing candle right at 880. If it can get through 880 and you see the volume pick up, then I would say, okay, maybe keep a tight stop, maybe give it a chance. But until it gets that breakout there, I would not touch it.
All right. Bah Humbug, BAH.
All right. I thought you were saying because I was talking bad about that stock. All right. BAH. Well, let's see. I don't like this big move down here on heavy volume, but it has held. I think that there are two key levels to watch. It's a pretty good performer relative to its peers. So I'm going to give it the benefit of the doubt and say that this support level right there holds. In the meantime, the recent highs have been around 73. So we're sideways consolidating. I think we'll break out to the upside.
All right. Excuse me, CGLX or CLGX, my bad.
CLGX at CoreLogic. Yeah, CoreLogic. This is one that I actually wrote about the other day. I think that the stock is at a very key area of support. It was starting to strengthen right here back in August, and even in September, it was near about a 6-7 month relative high in a group that's been pretty strong. So we had this 2 or 3 week period here that was rough, but otherwise, I think we've got a nice relative uptrend in play. So when I look at the chart, I think that it was a trend line that I was using when I talked about this. And so let me see if I can draw this in here. Yeah, it's somewhere right around there. Maybe I could even connect more of the, kind of like in there, that connects this low with these lows. And you can see it's down pretty close. I think this 45 to 46 area is an accumulation zone where you can keep a fairly tight stop. So I'm okay with this one.
All right, let's see. Last one is going to be SPWH. And of course, that's Sportsman's Warehouse.
Yeah, this was a great earnings report that came in one of these. I'm not sure. I think it might have been this black candle. Couldn't get through those prior highs, but look at the volume as it did finally get through. And then when it came down, it had just a little bit of a false breakdown just below price support and just below the 20-day moving average. But there were your highs. Couldn't get, look at this false breakout. When you see that, a lot of times it's a good signal to sell if you're a short-term trader. We pulled all the way back. Don't know how far it's going to go down, but it did go all the way back here, put in a double bottom, and then we got a breakout, which I think is very bullish. And a lot of volume, pulls back, bullish engulfing candle, moves up again. I think this one looks really good. It's only a $5 stock, so it's going to be a little bit more aggressive relative to the specialty retailers. This has been a bad group. The biggest risk here is specialty retailers as a group. The stock is outperforming, and it's got great volume trends. So I would maybe continue raising my stop. I think the recent low is going to hold 440 maybe. You could maybe even go up to the 20-day moving average if you wanted to keep it tighter, but I think the stock goes higher.
All right, that is our final 10 and 10. Those are the symbols. And, you know, if you like looking at charts being annotated like this, I do have the DP Daily Diamonds now, and I annotate 5 charts out of one of my scans. So you might want to check that out in the DecisionPoint blog.
Awesome. Well, we've got 1 minute left, and we're bringing
it
to a close. It has been
so glad we had this time together.
Let's don't end it with a song. I'm not. We do have up on the screen, though, the fall lineup. You know, as we bring a close to Market Watchers Live, there's obviously some opening doors here and a lot of other shows. So in addition to these, the new shows in the fall lineup, as Erin mentioned earlier, there's still a lot of great shows that are continuing. So make sure you check this whole thing out. I do want to say, Erin, though, it's been a pleasure. I want to thank everybody out there for tuning in over these last couple years. Be sure to check out all of our new shows. We would love to have your support there.
For sure.
All right. Well, that is a wrap, folks.
Bye.
Thanks again for everything that you all have done, all of your comments, all of your 10 and 10 requests, everything over the last couple of years. It's been awesome. It's been a lot of fun. I want to thank all the hosts and guests that have been on to help with Market Watchers Live, and of course, all the folks behind the scenes making everything go here. All right, please remember. Well, I don't guess the survey even matters anymore. I think we're just going to go ahead and wrap this up. I want to wish everybody a great Friday, great weekend. Be safe. Tune into our other shows starting next week. Happy trading.